passive income play here is, look, come on board, help lend to a company that's growing, and you will get a nice return. Meanwhile, the company, what, doesn't have to sell equity? Is that kind of the win for them?
That's exactly right. So our intention is to provide a passive income opportunity to investors, and they provide their capital in exchange for a percentage of sales rather than a percentage of the business. And so as a result, they start seeing their repayments from the business in month 1 versus waiting for a year 7 to 10 outcome before they see the returns from their investment.
And all of this, I'm sure, is to give more options and optionality to a retail investor who's looking for yield. How much have you had to focus in on ultimately education here? There is a lot of concern about the democratization of finance, meaning basically we all got showered with confetti every time we bought a stock. How have you thought about educating a consumer on this?
Education has been incredibly important in what we do. So we went to market coining our agreement as the repeatable revenue agreement. And the intention behind that was we wanted to shape the investor's perspective of what we do versus relying on their existing understanding. And so it gave us a new opportunity to actually educate the investor base and say, hey, this is how we do things, and here's every piece of the fundamental that you need to understand about our agreement before you get involved. As a result, we've kept the product just for accredited investors, but we think about that as we expand how we can broaden the base.
And it's coming in expansion at a time when maybe the mood music around the consumer and the economy gets a little bit better. How have you managed to see companies perform and show resilience? I mean, you're lending to really well-known restaurant groups, but then some individual names that might be a yoga studio, for example, or then a store. Which have done well? Has anyone had problems servicing?
So we exclusively focus on brick-and-mortar services businesses. And we define that as food and beverage, as you referenced. Then the second category is wellness. So think medical spas, gyms, salons. And then the third category is more traditional care, either provided in clinics or something like a car wash. And our belief, especially coming out of the pandemic, is that brick and mortar services is very much here to stay. And if anything, it's on the rise, because we all lived in a world where we weren't experiencing services. And we all decided that's not the world that we want to live in. And so we've seen consistently across our portfolio really strong performance, and of course that's aided by the rise in consumer spending that we're seeing as well.
I'm looking at sort of Jose Andres Group. Why did they need to access money from you? Why not go to a normal banking partner when you're that big a name, that big a player?
It's a great question. So we really think about our source of financing not necessarily for those that are in need of financing. When we look at the brick and mortar services sector, we believe that the capital stack and the options in their capital stack haven't actually innovated in the way that multi-unit retail has really innovated in the last decade. And so when we look at that, we think about what we're providing here at Bonside with our repeatable revenue agreement as expanding their capital stack. And so it's not necessarily meant to replace the equity on your cap table or replace traditional debt that you have in place, but to just give you one more tool in your belt that you can leverage as you think about growth and scale. And so we see businesses as large as Jose Andres Group adopting us, as well as the younger players that are being a lot more sensitive to dilution than they were maybe 3 to 5 years ago.
What about your cap table? Like, you're going out pitching yourself as a fintech business with a technology valuation. How have you raised funds? Has it been hard, easy to tell your story?
Yeah, so, I really came at building Bonside out of a personal need. Prior to building Bonside, built a brick and mortar business and felt that we were really underserved in the capital options that existed. Nothing quite fit what I was looking for. And so it was very easy to then translate that into a story and really sort of paint the picture for the need there. And so as we think about our cap table at Bonside, when we think about our roadmap ahead, our first product is the repeatable revenue agreement, which, you're right, is a financial vehicle. But when we think about the future, there's a lot of opportunity to serve brick and mortars beyond that.